The first stock will be, Paul, it's a REIT, and that's okay. The ticker is IIPR, Innovative Industrial Real Estate Investment Trust Company out of San Diego, which is, it's a German for, no, I won't, yeah. And it's founded in 2016. They have some subsidiaries, and they are a REIT, Paul.
Look at that stock price since 2016. Holy cow, $16 to now it's at around 188, 190.
That's a 900% gain in the past 5 years. So let's take a look at Innovative Industrial Properties.
Okay, so let me make the screen a little bit bigger because I know Uncle Seth always wants me to do that.
Thank you.
$4.5 billion market cap. Now, guys, I want to explain something about REITs before we go forward. The interesting thing about REITs is they have depreciation in there that's actually more than just, right now when a company spends on capital expenditures, they cannot expense that money necessarily day one. They depreciate it, but it's still money they put out. With real estate, when you buy a property, the government allows you to depreciate the value of the building. So let's say you buy a property for $10 million and you say the building is $8 million of it. They let you deduct that $8 million over a 25, 30, 40 year period of time, depending on what size the building is, et cetera. So with REITs, there's that extra depreciation in there that might not necessarily matter. Now, some of the depreciation is from capital expenditures from making the property better. That depreciation stays to stay in there. But the depreciation from just buying the property and depreciating it, that's where you get it confusing. You'll probably have a higher PE than normal. And look at that. What's the PE? 56.5. Because that depreciation expense on the building's purchase is driving down the profit big time. Driving down the profit big time. So I don't want to necessarily look at it like that, but we'll talk about these in general.
If this is the first time you've ever joined us, we're going to use our 8-pillar analysis of a stock to look at the fundamentals, the math behind this company, and see if this current stock price is warranted, in our opinion, of course. So pillar number 1 is PE ratio, which we want less than 20, which is an X in this case. And we'll move on to pillar number 2, which is, Paul?
Profit margin.
Look at that.
57.5%. With a gross margin of 96. I can attest to this. In our real estate deals, every time we rent an apartment, our margin's like 95% of that money because what does it cost? We have a high fixed cost in real estate. So this makes perfect sense. You know, any utilities, you're probably already paying anyway. And if you're not paying utilities, the tenant's paying it for anyhow, so it doesn't really matter. So very high margin. So an X on PE, a check mark on profit margin. Now here's the deal. The rules for REITs are they have to pay out 90% of their net income every year to their shareholders. So their dividend tends to be pretty high. 2.5% doesn't seem too high, but I don't know. $114 million a year. Now, let's go to their income statement.
Pillar number 3 is revenue growth over the past 5 years.
Oh my Lord.
Look at this. $1 million?
That's what it says. So guys, this is all because of growth. So one of the things I want you to understand when you do this is go look at how the same properties grew from year to year. Because a lot of this growth is all from acquisitions, right? But I'm sure some of the properties they bought grew from year to year as well in terms of the revenue. Figure out how much that was.
Pillar number 4 along the similar lines is profit growth over the past 5 years, Paul?
They lost $9 million. They made $80 million. Check mark there. I'm going to want to look at this company, since it's a REIT, more on the cash flow it generates. That's how I'm going to look at it.
Pillar number 5 is shares outstanding. We want this number going down, Paul.
Now, it's a REIT, guys. It's always going to go up. Because as they get more and more shares, they buy more and more properties.
Say that again.
It's an X. 3.35 million to 24 million.
Yeesh.
Yeah.
Okay, that's an X. How about current assets over current liabilities is pillar number 6, Paul?
122 million versus 100 million. Check mark there.
Nice. Very good. Okay, now free cash flow. This is what you wanted to see.
Okay, so they're free cash flow, guys. Wait a second.
Cash from operations minus capital expenditures, Paul. You know this.
Yeah, you know. I was looking at something else. 2.3 million to 133 million. Guys, I'm not looking at the average over the last 5 years. This is ridiculous, right? Yes. I'm going to take this last year and multiply it by a factor of, I don't know. This is why REITs are very difficult, guys, because they can grow very quickly just by buying more properties, right?
I see.
That's not a real growth thing. That's not organic growth. A lot of companies grow through acquisitions, but with real estate, it's especially easy. It's not like it's hard to buy another piece of property, put a management team in there and grow. You know what I mean? So, and when they do that, they're probably issuing more shares, et cetera. So you're not really getting apples to apples. What are you thinking about, Seth?
Well, so just to explain, this is our pillar number 8, is we want to take this free cash flow, multiply it by a certain multiple, a lower number for slow growing companies, a higher number for companies that may be considered more growth and more potential. I'm wondering what you're coming up with this one. I was thinking, is it just 20 is our multiple here, or you want to go lower?
This is where I get stuck. This is where I need to understand more about the company itself, what their current portfolio looks like, how much debt they have on it, what the market value is, because you can't look at their balance sheet to see a market value of the properties. Why? Because if you buy a property for $1 million and you put it on the balance sheet, let's say it stays at $1 million on your balance sheet. Let's say it's worth $10 million. What does it show up on your balance sheet as? Anyone?
I didn't hear your question. I wasn't paying
So
attention.
let's say in a piece of real estate, when you buy a property for $1 million, let's say there's no depreciation. It's on your balance sheet for $1 million. 20 years later, it's worth $10 million. What does it appear for on your balance sheet 20 years later?
$9 million?
$1 million.
Oh, really?
That's a very common theme amongst value investors, is where they can look at assets and go, wait a second, this company has depreciated this asset. They have 10 office buildings in Silicon Valley. They've depreciated all the way through. It's on their books for $100 million. They're actually worth $5 billion. There's hidden value there. So that's the issue about real estate on REITs, is figuring out, like, can you find a hidden asset value there from the fact that they might have owned these properties for a long time. Now, granted, they only go back to 2017. And also the job for real REITs is they want to buy and sell assets. They get fees off of it. It's a very lucrative business for them. So they want to do that. But how much for this property? I mean, what's the market cap?
Well, at a 20 multiple, we're at 2.6 billion.
It's at 4.5.
And the actual retail price is 4.5.
Now the question becomes, this PE here, 56, what should it be since they have depreciation? I don't know. It all depends on how much they attribute. This is why REITs are hard. You know, people always ask me for REITs because they're very attracted to that dividend. Oh, this is a nice dividend. It's not as high a dividend as I would have expected. I would have expected a 4 or 5% dividend rate here, right? So it makes sense that maybe it's double the price it should be. My gut tells me this is overpriced. I'm not going off it based on any sort of deeper analytics, and this is part of the process we're trying to teach on this channel, is going in deeper and deeper into these 10Ks, especially for REITs, to sit there and look and say, what are their assets? What are the assets behind them? All these things that happen, figure it out. And but my gut tells me this is overpriced.
Mo, are people trading this into bid and ask?
Actually, it looks pretty good, except for this bid and ask difference of 42 cents.
Too big of a
It's huge, but it is coming up through your sweet spot very nicely. You almost had an engulfing candlestick today, so probably tomorrow or something like that, you'll get one. Yeah, go for it. I mean, you're going to face a little bit of resistance when you're going into this 198, 195, whatever level that is, but this is actually not that bad, and you do have, once you get over that resistance point, you have all of this area to work with. So, I mean, this can probably go to 220 or something like that if you can get a little run on this. So, I don't know, maybe you guys want to throw this in the Discord chat, but the only thing I don't like is how high this is getting. This is like plug that we were talking about earlier. The stochastic is getting very high. Now, can it slow down or can it start to go sideways? That would be great if it did. I don't know if it will.
But I would look at REITs the same way I look at ETFs. Wait for big sector changes and sector drops, and then try to pick up these assets at cheaper prices. That's the way I like to play REITs.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.